What's up, everyone? It's Caddy with Money Investing. Welcome on board for another Market Open live stream here. Got lots to discuss. Yields pushing higher, markets pushing higher. The money printer is back on. We've got Janet Yellen coming on in under an hour. Jerome Powell tomorrow. Hope you guys are doing great. If you guys can see me, hear me, just give me a thumbs up. Just want to make sure the audio and the video is working well. Volatility is lower today, and we've got a lot of momentum pre-market. So hope you guys are doing great. Welcome to once again the wild west here in the market. Seems again very much all over the place with respect to what's going on. Of course, First Republic Bank is getting some help from JP Morgan. They're advising on what the next steps might be. And they're the ones kind of leading the charge here pre-market, up a little bit over 18%. Actually, 29% now. Wow, that's a pretty substantial move from what we looked at earlier. And JP Morgan Bank here pushing up a little bit over 2.3%. Bank of America is also green, up 3%. And my trade on FAS is up over 6.5%. So we're seeing some momentum here back to the upside. And Janet Yellen, again, is going to be talking in front of the Americans Bankers Association at around 10 a.m. So I will be going over that as well. In fact, we'll be live streaming what she has to say. So yeah, that's about it. And going over to some of the upgrades and downgrades. Audio, video, go. Perfect. We are good to go here. So Meta got an overweight rating. In fact, it is pushing higher pre-market. Last time I checked, it was up 2%. Right now up 2.7, back over 203. Citi upgrades Foot Locker to buy from neutral. Bernstein reiterates Stitch Fix as outperform. We've got D.A. Davidson upgrading New York Community Bank Corp to buy from neutral. Morgan Stanley reiterates Apple as overweight. Best Buy as a buy from Loop. Stifel resumes Alphabet as buy. Then we've got Harley Davidson to overweight for Morgan Stanley. Morgan Stanley also reiterating Exxon as overweight. Roblox as a buy. Amazon as a buy. That's pretty much going to wrap that up. And again, some of the headlines from this morning have really been just, Credit Suisse, of course, being bought up from UBS. UBS yesterday was green. Right now, 7% move to the upside, back over $20. And Credit Suisse pre-market is once again trading a little bit under $1 per share, just up over 3.4% after being down 53% yesterday. And of course, First Republic Bank is kind of leading the charge. It's just been so volatile for the banking sector. It's just been all over the place, and they've just been going down and up and all the way sideways, and just absolutely crazy. So let's see. Audio video is perfect. So how can the Fed realistically lower their balance and also the government? Christian, what is exactly the question? I don't understand. So RM, thank you so much. I really appreciate it. I'm glad you enjoy the content and you really like it. So thank you so much. And so Fed realistically right now is going to be doing two things simultaneously. They are swelling up their balance sheet, so they are doing some level of QE with respect to lending the money to these banks and literally taking in collateral at face value. At face value is what they're lending at, but they are receiving them at market value, obviously. But at the same time, they've been cutting rates. So tomorrow's meeting is super important with respect to what Powell has to say, and we'll find out whether they're going to be cutting rates, pausing, or are they going to be, raising rates. What is going to be that consensus right now? Still, the market's anticipating at least a 25 basis point hike moving forward for tomorrow. So, Caddy, safe to hold on to FAS and TMF. So I'm pretty much holding on to both. TMF is getting a little bit of a pullback right now as the yields are pushing higher. So as you can see, TMF is down over 3%. It has been a little volatile because yields have not been able to crack below 3.3%. So you can see that we pretty much came down to this level for the 10-year yields, and then we started going sideways, and we're now starting to see a little bit of pressure for bonds as supply comes in, prices are coming down, and yields are once again moving back higher. So yeah, TMF is doing a little bit, TMF is under pressure right now as yields are pushing higher, but my trade also on FAS is still valid, considering that we are seeing a lot of momentum back to the upside for banks. That's one of the reasons I pretty much picked it up, is because of these SIBs and the fact that they are systemically important banks, and the government's gonna backstop them and not gonna let anything happen to those banks to begin with. So yeah, that's where we are. 77% expecting the markets to be green today, with only 19% red, and seems like the money printer is indeed back on. We're seeing a lot of momentum. Of course, yesterday the markets were green. Most specifically, the Dow was higher, up 1%, with the Nasdaq only up 20 basis points, and even pre-market right now, the Dow is once again outperforming the Nasdaq and the S&P 500. So once again, we're seeing a lot of rotation away from tech, away from some of the big tech companies over to some more value. And energy and again financials were the big leaders yesterday. They did perform much better compared to some of the other stocks out there. So Lawrence says TMF will go back up, no worries. Yeah, so I mean, eventually I do expect the yields to be lower, right? So again, it's just a matter of time. This is for me more of an intermediate trade where I do expect yields to rotate back lower and crack below 3.3% eventually. And if they do, there's definitely going to be more upside for TMF and TLT considered, non-leveraged as well. Depending on your risk tolerance, you have to really assess, which is going to be the better deal for you. So Tesla pre-market up over 2.5%. Today seems like a good day for us to look at some covered calls. I will most certainly be looking at some covered calls to sell later today if Tesla can stay up 3 to 4% on the day. So we'll be looking into that. And then we got Apple here slightly flat. We got Google also flat, just trading sideways after getting an upgrade today. Microsoft here is just up over 1%. And I think semis are also taking charge here. Nvidia is up 1.4. 262, and AMD is also pushing higher at the moment, 72 basis points right now. Matthew, thank you so much. I really appreciate it. I just feel, I don't know, like I was going to take this weekend a little bit to just rest a little bit, but man, I've been exhausted even after this weekend. Like even right now, like talking, I feel like I have been talking a lot. And I'm just like starting to, feel a little exhausted there. So Markovian, if March 13 was our low, then unbelievably we will be heading higher than February's high. It's possible, but again, the real question is it more about kicking the can down the road, or is it really just we're pushing higher on some real growth and some real progress as the situation improves? Is it us putting a band-aid on the wound, or is it the wound is actually healed? That's the real question that we need to ask ourselves with respect to inflation and interest rates and everything that's been going on. To me, it feels a lot more like we're putting a band-aid on that wound instead of the wound actually healing. So it's, in other words, kicking the can down the road, which, yes, short term, there's going to be a lot of liquidity injected into the system, with the USD swap lines, with the bank term funding program, Federal Reserve lending billions of dollars to other banks to increase liquidity. That's a form of QE, right? That's them swelling up their balance sheet once again, printing money literally. And yes, short term, absolutely. I think there's going to be a lot of momentum, and that's exactly what we are seeing for this week. The markets are green. Pre-market, everybody's just celebrating. We're back to money printing here, QE, markets pushing higher. But what's going to be the long-term consequences of this? The Federal Reserve, it's kind of weird because they will be doing it simultaneously, right? They will be injecting money into the economy while also focusing on inflation. There's such a mixed messaging with that. Because you're either injecting money in the economy and you are stopping with your rate hikes and you are shifting a little bit, pause, or potentially even rate cuts. That's full-blown QE in my opinion. Or you continue to raise rates and then not inject as much money or billions of dollars to lend out to all these banks. So, it's going to be a quite tricky situation for the Fed and what Jerome Powell has to say. By the way, we will be live to cover that tomorrow. Very much looking forward to what Jerome Powell will say. So Viking says, kicking the can. It'll be kicking the can down the road. We'll see how earnings go. Lauren says, earnings will be important too. Like why are votes saying that we will go green today? Well, markets are green, right? Pre-market, so we are pushing high very much. So that's probably one of the reasons why the sentiment is very much positive going into this open. So Bank of New York Mellon, I talked about this earlier in my previous video. Definitely do check that out if you haven't already. And we also got the statement of the prepared remarks from Treasury Secretary Janet Yellen, who is again going to be speaking in less than an hour. So we'll be live to cover that in front of the Americans Bankers Association and at the Banking Summit. So we'll be listening in to that as well. Selective QE, yep. So the question for JP will be, what specifically are you going to do to lower your balance sheet? Yeah, they were lowering the balance sheet, right? They were doing a pretty good job in lowering the balance sheet. So if you come over to this, total assets, you can see that they were doing a pretty good job in kind of falling through that path. Yes, they were a little behind on their expected roll-off because they started with $47.5 billion and they spiked that up to $95 billion. So they were a little behind and they were doing well, coming down to $8.3 trillion from about just under $9 trillion. So did a good job at $700 billion shaved off the balance sheet. And then just in 1 week, boom, all the way back up to 8.6. So just 1 week alone put a huge dent on all the progress, not all, but nearly half the progress we made in the last year. So there's a lot of questions about DWAC. Lots of people have been asking about it. So let's take a look. I mean, I don't know. I've never covered this company. I've never covered this stock, but it's just seems to be making these lower highs and lower lows. So I don't know what to tell you. I mean, this is not a stock that I would particularly be interested in. Very, very low market cap, really low volume as well. So let's just quickly run through some of the banks here. So UCG, or in other words, UNI Credit, the bank over in Italy, up over 6%. We got Ally Bank up over 4.5%. We got Fifth Third Bancorp up 6%. We got BNP Paribas up over 3.9, almost 4%. Then we got FAS, of course, up over 6%. UBS is up over 7%, almost 8%. Very strong move. PNC is up over 4%. Berkshire Hathaway 1.3%. CMA, which is Comerica, up over 5%. Comerica is also in a very similar situation than First Republic and Silicon Valley and Signature. We got Goldman Sachs up 2.4%. Morgan Stanley's up 2.8%. Spurbank, obviously green. We got Trust Financial, 5.8%, almost 6%. BlackRock, JP Morgan up 2.4%. And Bank of America was also up 3%. HSBC up over 1%. So lots of momentum driving the banking stocks higher. So Alex, among the struggling bank stocks, which one is the best in shape for us to get in? If you take a look at the quadrants that I shared in my other video, right? I don't have that open right now. But if you take a look at that quadrant, you can see in the bottom left, whichever banks are in the bottom left are going to be the ones that are very sound. I mean, bottom line is there's not a single bank that actually is going to be profitable on their marketable securities, in other words, their assets, because as interest rates have gone up so high, almost all of them are underwater with their assets if you kind of do the mark-to-market accounting. And then I don't think there's any bank out there that has 0% uninsured deposits. There's always going to be some level of deposits that are uninsured because of the deposit base. It's just a matter of finding the ones that are least risky in terms of those two metrics. Another thing to note here is that almost every single bank is susceptible to failure because the only thing stopping it is bank runs, right? If we actually see bank runs happen for any bank, right, they are going to be under a lot of trouble. Why? Because number one, they've got lots of uninsured deposits. In fact, 40% of all deposits in America are uninsured. I talked about it in my previous video. Go check that out. It's a crazy stat, but 40% of all deposits in the United States are uninsured. And again, if you take a look at the banks as a whole, $2 trillion worth of securities are underwater, or that's the amount of losses that they have carrying on their books. So it's just question of SIBs. That's why I've been long FAS. I've been kind of talking more about XLF because you're getting the best of the best in that ETF, and you're able to take advantage of this volatility after being so oversold, right? In just a few days, we've seen this ETF drop 60%. FAS, for example, has dropped, a little bit over 43%. Of course, it's levered, so you got to assess your own risk tolerance. But the reason why I've been talking about XLF is because of the fact that it owns JPM. It actually has JPM, Berkshire Hathaway, Citi, Wells Fargo, Bank of America, some of those too big to fail banks. And we know what's going to happen if there's even the smallest, something that were to happen with these, we know what's going to happen. The Treasury Department is going to take the first opportunity to step in and protect these banks. So in my opinion, what's causing the greenery in pre-market? Do you anticipate rally tomorrow and further in the future? In other words, whatever JP does tomorrow is really inevitable. Well, I think it's got a lot to do with the fact the market's anticipating a little bit of a pivot to QE. I think that's what really is driving all this momentum back up, right? The liquidity that's coming back into the market, it's very, clear sign. And there's been charts around on Twitter and everywhere where you kind of put together the money supply with respect to the S&P 500. Let me see if I can bring that up. Let's see, M2, or no, not the M2, it was the Fed's total assets. Let me see, balance sheet, total assets. There we go. That's a little bit of a spike, right, that you see. And then you kind of compare this to the S&P 500 new price scale. And you see a very similar trend where, every time the balance sheet expands, you can see that over here, the yellow bar, the yellow line absolutely skyrocketed, right? Assets went from 4 trillion to over 7.2. Like in just that short time span, the Fed's balance sheet exploded during COVID, and we know what happened with the market. And then as soon as you take a look at, what happened here, the Fed's balance sheet started softening a little bit. It started going sideways, and we started the tightening process, and we started dipping lower, right? And the markets are just absolutely getting shattered with the QT. But again, it's not always the case. The markets have found a way to push higher despite the Federal Reserve's balance sheet going sideways. But then over here, you can see that we started going down as the QT process began, and markets pretty much in 2018, it went into a bear market, so they had to back off. The Federal Reserve had to back off again. And once they started printing again, then you can see the markets recover back up to all-time highs. So, it as unfortunate as it is, money supply and money printing has a lot to do with it. So I think that's what the market is, once again, kind of celebrating at the moment. It's probably why gold going up. Yep. So we've talked about gold, did a video on that before. So Eminem says maybe European banks. Well, the situation's not any better in European banks than it is in the US, but sure, I mean, you can find, some European banks that might be in a much better situation overall. So the problem is, I've been trying, the last couple of days, I've been trying to really assess in terms of the US banks, what is their actual market value, but I've been having some trouble to really calculate that, because banks over in the US, they report their balance sheets on a face value basis, on their book value basis, so they don't really report what the market value is. So even in that research paper, they had to go through certain reports that they're required to report with certain organizations and kind of use this formula for estimating what the market value of these assets are in order to understand how underwater these banks are. I've been trying to, over the last couple of days, I've been trying to look for as much data, as much, information on that, but haven't been super successful. But we'll keep trying, because my goal right now is to actually do a video on how to analyze your bank. That was going to be the title of that video, is to how to analyze your bank. So you can go look at your bank's earnings, balance sheet, income statement, and analyze it and kind of assess how's the situation with the bank that you have deposits in, right? I think that's going to be super helpful for everybody if you can kind of analyze your bank. It's going to definitely have that peace of mind. Okay, your bank is in, what type of situation it is, considering the market value of their assets on the balance sheet. So, but it's been tough. I mean, they report with book values, and it's kind of difficult to really assess. Yes, everybody, just make sure that you drop a like. I would really appreciate that. 54 likes right now. We've got 350 people watching. We can definitely get up to at least over 150. And again, in under 40 minutes, I've got Janet Yellen talking. So we'll be streaming that as well. So my favorite gold index fund, I think GDX is like a regular VanEck Gold Miners ETF, but then also I think you've got gold ETFs here. So, just regular gold, Barrick Gold Corporation, pays a dividend. Again, I think these are some to consider, but with respect to gold, I do prefer physical gold because my allocation is not substantial. So I have again, I bought a little bit of physical gold last year and will most likely keep doing that a little bit this year. So how about uninvested money in Fidelity accounts? So what you have to really, so Gianna says, like you've been saying, Wall Street is addicted to that QE. Yeah, I think that's the thing. Markets have just become too addicted to quantitative easing. It's we can't find a way to push higher without QE. The markets need QE to actually go up. It's just we're setting ourselves for a very, I don't know, like just setting ourselves up for disappointment in the future if there's not infinite QE. Like we can't expect infinite QE for the markets to go up. But anyways, uninvested cash, you really have to be, making sure that SIPC insurance is covering you for those limits. Again, I've talked about this in other videos. If you are in a credit union, you've got a National Credit Union Association, you got to make sure the credit union is part of NCAU. And if you are working with a bank, then you got to make sure that you are an FDIC insured bank and the limits are $250,000. So you are below that limit, or you kind of spread across different accounts. And if you're working with a brokerage, then that brokerage is member of the SIPC, Securities Investor Protection Corporation, or is it SPIC? It's SIPC, I think. And that way you're protected up to $500,000. And then if you have, CDs, I think there's another credit certificate deposit organization as well, or sort of authority on government basis that can also protect you on that. Gold Mike. Do you prefer coins or jewelry? I do prefer bars. Like I do have like really small, like 20, 30 gram bars, which are pretty cool. So I do like that over coins or jewelry. How much gold changed hands during merge in India? A lot. Anyway, we are now open for business here. So NASDAQ is going to be over here, S&P and the Dow. So S&P is green 77 basis points, getting a big open to the upside. You got the NASDAQ pushing up 80 basis points. And the Dow is up over 322 points, pushing up 1%. And we've got liftoff for a lot of stocks here. Tesla's up 3%, 188, 189. Elon Musk advocating for a 50 basis point cut. I covered that in my separate video yesterday. Bill Ackman advocating for a pause. What do you guys? All right, I'm gonna ask a different question today. I'm not gonna ask what you expect the Federal Reserve to do or what you expect the markets to do or anything like that. I'm going to ask, what do you think, or what do you prefer the Federal Reserve should do? Okay. In other words, if you were Chair Powell, what would you do? Okay. Rates tomorrow. Hike them, pause them, or cut them. Right? So again, this is not your expectation, but what would you do? This is not what you're expecting the Federal Reserve to do, but this is what you would do if you were in that situation. Because, Bill Ackman's suggesting a pause. Elon Musk is suggesting a 50 basis point cut, like they should cut rates. And I'm more of the, idea that they should pause and kind of assess the situation. But I want to see what everybody else says. Cat is married already to the market. Yeah, that's facts. So Jay's definitely hike. Brightman's definitely cut 25 basis points. Justice 50 basis points. Mills 25 basis points. CK's pause. So 56% hike them, 34% pause them. Okay, so very few people here agree with Elon Musk suggesting that the Federal Reserve should cut rates by 50 basis points. I think that was a bit extreme. I think 0.5% cut is definitely going to be very bullish for the market short term, absolutely no doubt. But it's going to be very clear that we are, positioning ourselves for a bigger battle in the future with inflation. So we got 55%, majority of people, they're suggesting that they should hike them, and 37% pause. So can you do a video regards to BRICS and all the countries that are signing up with that at the same time, they're all building gold reserves? Yes, so that is going to be an interesting idea there. Thanks for suggesting. I'll definitely see if I can do a video on that. Captive says you're addicted to QE too. Get this crash over with. I would take the CEO of SIB money from the sell of the bank and pay it towards the balance sheet. Yeah, I mean, yeah, Jay says, look at the S&P at the 70s, miserable time to be an investor. Absolutely right. And that's the scary part, right? And one of the things that I mentioned in my other video is that inflation in 1970s was at close to 6%, exactly where we are right now, right? Exactly where we are right now. Interest rates were dropped from 10 to 6, right? So they were dropped from 10 to 6. So we were at that point in time 50 years ago, we were at inflation 6%, rates at 6%. And just because we had dropped them from 10 to 6, inflation spiraled back out of control. So even 6% back then wasn't enough to cool inflation lower, right? So that's how sticky and stubborn it becomes, right? Professor Demodron also mentioned that inflation is going to be stubborn. It's not going to come down enough. So if you think about it logically, if 6% rates back then weren't enough to curb 6% inflation, what makes us think that 4.5% rates today are going to be enough to curb 6% inflation, right? Something to think about. Not saying that it's not possible. It certainly is possible. It can happen. Money supply is already contracting. So that is a possibility. But food for thought. Elon says some things, and then he backs away from what he said when he thinks it through. That's so true. I feel like he says first and thinks later. Tesla FOMO. Let's take a look. I mean, Nasdaq's doing great, up 1%. We're seeing a lot of momentum here. Tesla's up 3.4. We got Google here pushing higher, 77 basis points. Almost all of big tech is up. Meta's green. Tesla, AMD, Nvidia, Amazon, everything's up 1%. We got Digital Turbine, Neo, SoFi. Let's take a look at banking. So in banks, the big winner is First Republic, up 24%. Then we've got Western Alliance up 10.4%, UBS 6%. We got Deutsche, FAS is up 5.8%. Although seeing some selling pressure intraday. Same thing with FRC. We're seeing a little bit of selling pressure intraday. UBS, same thing, red candle on a green day. Deutsche, exactly the same pattern. So intraday, we're still seeing some selling pressure come in for banks. They're not completely out of the clear. Again, we'll see what Janet Yellen has to say in about 24 minutes or so. But we are seeing a red candle on a green day for a lot of these. I've got actually a very interesting video coming out later today on construction employment, which I think is going to be quite insightful with respect to the recession lag. Yep, so Raf, remember, Caddy, that 70s people didn't have the money that people have now, and gas prices is coming down sustainably. Well, I mean, the reason for the inflation in the first place was because of all the fiscal stimulus and the money supply back then as well. So people were actually spending a lot of money. That's one of the reasons why inflation did spiral out of control, because of poor fiscal policy. And then you're right about gas prices coming down, so that's really good. However, oil prices are back higher, 2.2% right now, back almost at $70 a barrel. But I think this alone is not going to be enough. Like, energy has done a lot of damage to inflation. In other words, both on the upside and on the downside. I mean, it's done a good job in coming back down. So it's still down 40-45% from its highs. But we need housing prices, shelter prices to roll over. We need food prices to come down. I mean, ask anybody, like, are you paying more or less for your grocery shopping every month? Like in March, are you paying more today than you did last month? Or are you paying actually less than what you did last month, right? That's a quick survey that you can actually do on a more regular basis to kind of assess. Obviously, it's not going to be a huge data point. Like it's just going to be one store, one location, one household, but it just gives you a little bit of a sense, on a more aggregate basis. But food prices are stabilizing. They're not coming down. They're stabilizing, though. Energy prices, oil prices are coming down, but shelter is not. Yeah, Tristan says, need house prices to fall 200,000. Facts. We do. So 59%. 59% is very much on this premise that they should hike them, and 36% pause. Okay, it's a good poll. It's a good poll. That's something that I was expecting. Very few expecting cuts from the Federal Reserve. Gonna end that right now. So T says, I almost wanted to totally crash so we can truly say right there's the bottom, like when a builder bends over. Yeah, I mean, there's the U.S. economy overall, powering 25% of the world economy, definitely has its pros and cons, right? It has to thread that needle very carefully, because if anything happens to the U.S., the world economy is not going to be in a very good shape, right? So that's why we always see the Treasury Department, the Federal Reserve always step in at the first warning sign the U.S. economy is struggling. They step right in to backstop everything, right? Because they've got a pretty sizable economy to begin with. But, eventually we'll see how this all plays out, because this is a much bigger macro problem than anything else. And we're not talking about this one rate hike cycle, and then, once we get a soft landing, everything's going to be fixed. The debt levels, the fiscal deficit, I mean, those are some longer, we're talking decades long ticking time bombs that we'll see eventually how they play out. Not necessarily saying they're just going to be like this terrible situation where everything's doomed. No, we're going to see how this all plays out. And it's kind of laid out pretty well in Ray Dalio's book, and, how these debt cycles also play through over centuries. So we're seeing a little bit of a pullback here. S&P still green 1%. Yields are still pushing higher. 10 years back up almost at 3.6. We got the Dow up over almost 300 points, and the NASDAQ still pushing higher. Microsoft is struggling on the day today, and Netflix is now red. TTCF for the win. The biggest outperformer today, up 7%. Who would have thought that the best place to be to outperform the markets today would be TTCF? So FinTech, almost everything's green. Ally Bank also doing really well, up 7%, although Ally Bank is also holding on to some pretty heavy losses in the market with respect to their MBS and US Treasuries. Let's take a look at energy. And we've got everything green because oil prices are recovering pretty well. I'm bullish on Tesla and Nvidia. That's pretty good, Ben. Just be careful of the valuation as well. So what do I think about natural gas? In terms of what? Like in terms of what's the question? Like, what do I think about natural gas? Like, yes, it's an important utility. It's been coming down quite a bit recently, so that's helped inflation overall. As you can see that it's just absolutely plummeted pretty substantially here. So 78% down from its highs. So that's obviously helping inflation overall, but we want to see more shelter prices, food prices to also come down. Yeah, let's take a look at Tesla covered calls. If my VBull works, let's see. Hopefully it does. But again, sometimes I just don't see the premiums as soon as the market's open for some reason. I don't know why, but yeah, still don't see anything here. So frustrating. It's always like this. Just don't see the premiums. But absolutely, I will be definitely looking to sell some covered calls on Tesla later today to hedge some on the downside and the fact that it's green very much. So So Nima, is TMF a buy? Again, your analysis needs to be based off of the yields. So if you don't know how TMF works, because it is a leverage ETF, I would consider taking a look at TLT. It's also like a long duration bond. And so far, I mean, it's been this consolidation pattern, right? Yields have struggled to break down below 3.3, especially for the 10 years. We haven't really seen a breakdown below 10 year, 3.3%. So as soon as we get a breakdown below this level, which is this support, I do expect more downside for yields and more upside for TLT and TMF. That's why I'm a little bit, positioning myself to kind of building out that position on TMF. So again, you have to do the risk analysis yourself. My thesis is simple that eventually rates will come down, and if and when they do, there will be more upside for bond prices because of the underperformance we've seen from bonds all of last year. This was the worst performing year for bonds, I think, since 1700s. So we'll continue to monitor this position as well. 15-minute delay on options chain. That's crazy. Chris is asking what brokers do people use. I use Interactive Brokers. So I've been using TD Ameritrade and Fidelity for a long time, so they're pretty cool. But again, it's like what's safe, right? In this environment, what's even safe? Time to short ExxonMobil for bad 2023. Danny's asking. So I mean, the moves already happened quite a bit. They've already moved down, but they are pushing up on this upgrade and the fact that energy prices are pushing back up right now. So oil prices are green, so they're down 17%. And Chevron is also lower from their highs. They were down 19, 20%, but today they're obviously very, very green, pushing up 2.5%. So I would say tread carefully there. So what strikes am I looking at? We'll possibly looking at 225, 230, like around those levels for Tesla. Like those are the ones that I was looking at earlier as well when I ended up selling some cash puts, or no, covered calls, and then we ended up taking profits. And now the fact that it's up so much, back over 190, I really want to look at, what the option chain looked like before the market turns on me. Because this always happens, right? I'm always live streaming and the markets are doing really well. I mean, Tesla's pushing higher. By the time I get done with live streaming and go to look at the option chain, premiums have dropped 30, 40% because the stocks rotated back down. So hopefully it can stay this way for the next, 30, 40 minutes. So Kevin says Powell needs to raise rates tomorrow because there is no FOMC in April. Yeah, I mean, we'll get the SCP as well. That's going to be super important too. Like, what is the Federal Reserve actually projecting out for rates, inflation, unemployment, and GDP? All of that's going to be giving the market a lot of information. All right, so 14 minutes. You've got Yellen in front of the American Banking Association. It's paying $2 for a month out. That's it? Really? $2.25? $2? Nah, there's got to be more. Really? Tesla premiums are usually higher. On a day like today, they should be higher. All right, so FAS is now starting to push right back up almost 7% at the moment, so $57. Getting a little bit of a reversal there. And XLF is also up 2.4%. Again, we'll see if this banking, sector continues to move up, especially XLF. They're some of the bigger banks, so. Like a star, thank you so much for that donation. I really appreciate that. Got scared so much, I exited all my positions. Well, I would suggest that you don't trade so much on emotion, because if you are getting scared, then that's definitely trading on emotions. Just look at the value, right? Look at where you are on an aggregate basis for the market. Look at what stocks you have, of course, cost basis and fair values and all that stuff, and then make a decision based off those numbers. 3.6, okay. So not bad. Not bad. Yeah, 368, yeah. So that's obviously a lot more than just $2, but so volatility down 7%, Bitcoin's just a little bit over 28,000, and Ethereum just over 1,800. Of course, crypto has done really well amid all of this. So if you come over to this chart, 1 month, the 1 month return for Bitcoin, actually let's just do 3 months here. Let's see. Yeah, in the last 3 months, Bitcoin up 67%, Ethereum's up 50%. Then we got tech and comm services, the next two best sectors, 17 and 14%. Crypto has really just taken off so far this year. So banks these days represent good risk reward, especially because of all the fears. Well, depends on the bank itself, right? Depends on what bank are we looking at. So that's why I'm like in XLF, because as I pointed out, those are SIBs, right? Systemically important banks. They're pretty much about as safe as they can get. Their capital ratios are much better. Got a lot of liquidity there. Even though they're still underwater, they're going to be backstopped regardless of what happens. So that was the entire premise behind, buying FAS or XLF. What's my long-term thesis on Bitcoin? I don't know. Like if there's a way to really value Bitcoin, I would have definitely taken a look at it. I mean, if there were earnings or cash flows or something, right? Something that we can put a fair value on, something that we can project. Okay, if this is going to grow over the next several years, then we can discount that back and take a look at the present value. But there's nothing that we can, or I can at least find and look at. So I have literally no analysis on Bitcoin for the future, because completely depend on demand and supply, right? I think 22, 23 million supply, and whatever demand comes in, price moves up or down. So I think the blockchain technology may have some utility, but that's about it. Coinbase is doing really well too. Glad I went at around $60. That's great. Coinbase should be doing really well as Bitcoin's moved up. So there we go, $78. Very nice move. $85 is going to be that next resistance for Coinbase. That's going to be that next level to watch. All right, 9 more minutes, and then we'll hear from what Janet Yellen has to say. She does have some prepared remarks. In the meantime, if anybody wants to listen to Jim Cramer, I can play them on. I can play them on. Just let me know. So what's my take on Balaji's take on Bitcoin hyperinflation? So I haven't heard of that. Some people are saying that he said that it's going to go to 1 million. Wow. $1 million. It's possible. I mean, if demand comes in, supply remains stable, and it's possible. So Berg, my take on Enphase, I actually did a video on them recently, talked about it, and it's been selling off quite a bit. So again, make sure that you do check that out. We talked about 177 as being a decent support level for Enphase. Last couple of days, it's been pushing higher up under 4.4% today, but I would be a lot more interested in low 100s, just considering the long-term growth rate and the valuation for this stock. So I did a complete video on them, so feel free to check that out. So I'll do an audio check here, a couple minutes. Not Kramer. Bitcoin 1 million in 90 days. What? That's gonna be crazy. Bitcoin 1 million in 90 days. So why doesn't Trading Economics or Foreign Factory note that Yellen has a speech? I don't know. Is it insignificant? Well, she's talking about the American Banking Association at the banking summit, talking about the current bank crisis. So you tell me if it's significant or not. So I mean, it may move the banks a little bit, may have some effect on the markets. We'll listen in. She's already released the prepared remarks, which I broke down in my other video, so you can watch that one as well. Well, released about 1 hour ago, talking about the prepared statement and what she actually talked about in that report. But yeah, we'll see what she has to say. 6 more minutes. So we're seeing a little bit of a pullback for this chart. This week, the relative performance shifted back down after a very strong week last week, 4.72% outperformance from the Qs relative to the SPY. This week, they are down a little bit over 90 basis points. So we are seeing a bit of an underperformance from QQQ relative to SPY. Ed, are you buying XLF? No, I already have FAS. Yellen has gotten really old, Kevin is saying. Well, I can think of another person who's really old and is in the office. Right? But no, what was the question here? You buying XLF? No, so I'm buying FAS, and do you think those remarks will have an impact on the markets? I mean, it really depends on what she says, I'm sure. I mean, if there's anything new that she says that's not in the prepared statements, sure, the markets will definitely move. Banking sector might move. But she was a little bit backpedaling on what she said during the Financial Services Committee, that not all insurance, not all uninsured deposits are insured. In the prepared statement, she once again vows for full support for regional banks to contain this fear and this contagion of bank runs. So that was said in the prepared remarks, and again, we'll see what she has to say today. All right, so a few more minutes, and we'll see. Tesla now up to 191. A lot of momentum here, 4.5%. Let's take a look at our main watch list. So Tesla winning the day, 4.5%. We got AMD, Meta, Nvidia, Amazon, Google, all up over 1%. Netflix struggling, Apple's flat, and Microsoft slightly lower. And NEO is also doing really well, back up to over 930. Up over 6.7, almost 7%. All right, here we go. Finally, thank you. So, let's see. April 21st, may go April 28th. Let's go down a little bit. We've got 200, 1060, 225. We've got 375. Not bad. 220 is not bad. I don't know. Like, some of these premiums are so good. I just feel like, I wouldn't mind 200 because, $10. That's something definitely to pay attention to, right? Because you can get sucked into some of the higher premiums. You can cap your upside that way. Let's just go further out, 40 days plus. 60 days, May 19th. Looking at 225 at 650, 230 at 570. Yeah, I would then be going up to 240, then $4. We'll see. Again, I'll send out the alert. I will most likely be selling some calls on Tesla. We'll definitely send out the alert in the Discord later on what the strikes and the expiration is going to be. But man, those premiums look good. Some of the more at-the-money calls, premiums are juicy for Tesla. They always are. I mean, on a green day, let's take a look at for Nvidia. Nvidia, if you are somebody who's holding Nvidia and is, very much profitable on this trade, one of the best strategies to utilize right now are zero cost collars. Kevin and I were talking about that earlier, but if you're somebody who's holding on to Nvidia, you're not comfortable kind of letting go of the shares right at these prices, despite the price itself being very overbought and the company being overvalued and whatnot. Zero cost collars can be a very efficient strategy. It's like a free insurance policy that you're just basically buying on on the stock. And it mostly does work if you are like up on a stock a lot and you're not willing to kind of let go of it completely, right? You know what I mean? You're not kind of looking to sell, but instead you're just like, want something to protect your downside while also letting the stock run as much as it can. So so when is Yellen speaking? In just about a couple minutes here. 1 minute. We'll play that as soon as it's live, and I'll do an audio check, so just give me a thumbs up if everything is working well. So FRC, yep, halted right now, 38% green, back up to almost $17. We're just waiting on CNBC here to get that started with. Look at the NASDAQ go, 1% now. S&P with a gap up on the 5-minute candle here, up 1%. The Dow also pushing higher. Hopefully this started over here. Have this started here? No.
Before, of course, all this banking turmoil. Latest headlines as they cross for you. But first, we do want to get some economic data to you. Existing home sales just out. Diana Olick has the numbers. Diana.
Well, Sarah, existing home sales in February jumped a whopping 14.5% month to month to a seasonally adjusted annualized rate of 4.58 million units. That is the first monthly increase in a year and the largest jump since July of 2020, according to the realtors. Of course, that's when the pandemic started. Also well above the 5% gain the street was predicting. Sales were still down just over 22% from February of last year. Now, this count is based on closing, so contracts likely signed in December and January when mortgage rates dropped to the low 6% range. They are now back up to around 6.7%. Inventory was up 15% from a year ago, but no change from January and still at a very low 2.6 month supply. And even with that low supply, prices went negative year over year for the first time in 131 months. That's over a decade. The median price of an existing home sold in February, $363,700, down 0.2% from last February. Now, despite the jump in sales, it's still taking an average 34 days to sell a home, up from 18 days a year ago. First-time buyers also still very low at just 27%. And I want to just note on that median home price, a median does reflect the mix of homes that are selling, and we are seeing much more activity on the lower end of the market because of higher mortgage rates. The luxury end is dropping fast. So part of that price drop is that median mix shift. Back to you guys.
Diana Olick. Diana, thank you. Nice beat there on existing homes. Though the February data, David, seems kind of old at this point, just given the fact that so much has happened in the last few weeks, and we're all trying to assess what the impact is on the economy. And first, where we are in this sort of crisis moment, First Republic stock is working today.
It is.
For a change.
It is. It continues to be halted so often. This time, I think, as it moves higher, last I have it up 36+%. You can see it right there. But Sarah, we really just don't know on this. I wish we could bring more clarity to the situation, but I'm not sure there is that much more clarity that can be provided at this point. You know, I've been reporting on it for days and days now. JP Morgan is advising the company in an investment banking capacity as it would any other client in terms of what its potential options would be. There is thought to be a fairly large hole in terms of the assets. A lot of deposits have left. That makes the cost for them much more so. Perhaps allows them, or doesn't allow them, I should say, to make loans in an advantageous way, given their cost of funds is so much. If you're borrowing at the discount window at 4.75%.
But they have the liquidity.
Thank you, Bob, for your leadership with the American Bankers Association. I greatly appreciate the invitation to be with all of you at an important moment. As everyone in this room knows, the American economy relies on a healthy banking system that can provide for the credit needs of families and businesses. American households depend on banks to finance their homes, invest in an education, and otherwise improve their standard of living. Businesses borrow from these institutions to start new companies and expand existing ones. Almost 2 weeks ago, we learned of problems at two banks that could have had significant impacts on the broader banking system and the economy. The situation demanded a swift response. In the days that followed, the federal government delivered just that: decisive and forceful actions to strengthen public confidence in the U.S. banking system and protect the American economy. Let me be clear. The government's recent actions have demonstrated our resolute commitment to take the necessary steps to ensure that depositors' savings and the banking system remain safe. Our approach had two main pillars. First, we worked with the Federal Reserve and FDIC to protect all depositors in the resolutions of Silicon Valley Bank and Signature Bank. The steps we took were not focused on aiding specific banks or classes of banks. Our intervention was necessary to protect the broader U.S. banking system. And similar actions could be warranted if smaller institutions suffered deposit runs that pose the risk of contagion. I believe that our actions reduced the risk of further bank failures that would have imposed losses on the Deposit Insurance Fund, which is paid for through fees on banks. Second, we announced a new facility to provide additional liquidity to the banking system. The Fed's new lending facility, the Bank Term Funding Program, is designed to help banks meet the needs of all of their depositors. The situation is stabilizing, and the U.S. banking system remains sound. The Fed facility and discount window lending are working as intended to provide liquidity to the banking system. Aggregate deposit outflows from regional banks have stabilized. And as you know, 11 banks, including the very largest and some regional banks, announced $30 billion in deposits into First Republic Bank last week. This support represents a vote of confidence in our banking system. We're continuing to monitor conditions closely. My team and I have been in close communication with many of you, in addition to federal and state regulators, other market participants, and international counterparts. While we don't yet have all the details about the collapse of the two banks, we do know that the recent developments are very different than those of the global financial crisis. Back then, many financial institutions came under stress due to their holdings of subprime assets. We do not see that situation in the banking system today. Our financial system is also significantly stronger than it was 15 years ago. This is in large part due to post-crisis reforms that provided stronger capital standards, among other important improvements. In the coming weeks, it will be vital for us to get a full accounting of exactly what happened in these bank failures. Regulators have already announced a review into Silicon Valley Bank. We are currently focused on the situation at hand, but we will need to re-examine our current regulatory and supervisory regimes and consider whether they are appropriate for the risk that banks face today. We all share an interest in ensuring that the United States remains the strongest and safest financial system in the world. Given recent developments, I think it's important to reaffirm a broader point. Our dynamic and diverse banking system is critical to the American economy. Large banks play an important role in our economy, but so do small and mid-sized banks. These banks are heavily engaged in traditional banking services that provide vital credit and financial support to families and small businesses. They also increase competition in the banking sector and often have specialized knowledge and expertise in the communities they invest in. Indeed, many of these banks have played an important role in supporting our economic recovery. In the depths of the pandemic, Treasury was tasked with getting money quickly and responsibly to those who needed it. So we work closely with many of you to send economic impact payments to millions of families. You also worked with us to deliver advance payments from the Enhanced Child Tax Credit, which helped cut child poverty nearly in half in 2021. And we've collaborated to rapidly deploy assistance to hundreds of thousands of homeowners facing foreclosure. I also know that many of you are working with state governments to inject new financing into small businesses as part of our state's Small Business Credit Initiative. In the prior iteration of this program, lenders with less than $10 billion in assets accounted for 95% of all program-supported loans. Our administration has also been focused on working with mission-oriented banks to put us on a path toward inclusive economic growth. For example, Treasury's Emergency Capital Investment Program has invested almost $8.4 billion in depository institutions that are CDFIs and MDIs. Treasury is committed to ensuring the ongoing health and competitiveness of our vibrant community and regional banking institutions. So to end, let me return to where I started. A safe and sound banking system is integral to the health of the American economy, and we are squarely focused on doing our job. And you should rest assured that we will remain vigilant. I look forward to continuing to work together to strengthen our banking system and our nation's economy. Thank you.
All right, everyone. So that's the entire stream, pretty much the entire prepared remarks. So we didn't get any new information from her. But that's going to be it for today. So thank you so much for joining in. I really appreciate each and every one of you tuning in for the live stream here. And make sure that you also drop a like and, of course, subscribe to the channel if you're just joining us for the first time. The market's here very, very gapping up and, very flat, consolidating sideways intraday. We are seeing the Dow pull back a little bit. Yields are still higher. Banking still pushing higher. And, of course, Tesla pushing up. And Google, take a look, 1.7% now, back over $103. So, again, thank you so much for joining in. Really appreciate it. And as always, happy investing.